Welcome back. Charles Schwab announcing this morning it will buy private markets platform Forge Global. It's a $600 million deal that values Forge at $45 a share. Forge's stock skyrocketing, of course, on the news, up nearly 70% today. The acquisition comes just 1 week after Morgan Stanley announced it was buying EquityZen, a private markets trading platform that competes with Forge. We should also note that Forge Global does have a partnership with CNBC to provide private market data. Joining us here first on CNBC to break down the deal is Charles Schwab CEO Rick Wurster. Welcome, Rick.
Sarah, great to see you. Thanks for having me on.
Great to see you, too. So this is your first deal as CEO, and I'm curious what the strategic rationale here is.
It's a great opportunity to provide access to our retail clients, to help them grow wealth through a marketplace that is growing and where there's lots of opportunities to create wealth. It also aligns with our history of democratizing access to markets. When Chuck started the firm in the mid-1970s, it was very expensive to invest in public equities and inaccessible to everyone but the wealthy. I think we're trying to play the same playbook in privates and create an opportunity for every investor to have access to the wealth creation of private companies in our country, of which there are an incredibly number of growing private companies.
What makes Forge unique? I'm looking at the share price. So you're paying $45, more than 70% premium to the closing price on Wednesday. So what is their special sauce here?
Yeah, Forge is a unique company. Number one, they're the leader in the private company marketplace. So where buyers and sellers go to sell their private company shares and where buyers come to buy them, they are the leader. They have relationships with more than 625 companies, which is more than anyone else in the space. And they've also had the most transactional volume, so that they are the leader in that space. The other thing that Forge does that we find really appealing is that they're also able to create a fund structure that will allow any participant to invest in a basket of private companies. So as an example, in the first quarter of 2026, we expect to roll out a 40 Act fund, which will provide exposure to the top 60 private companies in the country. And that'll be a great way for the everyday investor to get exposure to a growing asset class.
How does that work, actually, in terms of net asset value or liquidity? I'm just curious. As we see more of these types of vehicles, how do you think about them?
It will be structured as an interval fund, which will allow it to operate in a way that deals with the fact that there isn't the same liquidity structure as a public market backed 40 Act fund.
And how do you think about the growth of private markets overall? Obviously, you are increasing access for your client base. The access to capital that these private companies have, Rick, is truly remarkable. We talk about it all the time. I'm just curious as to how you sort of see things over the time in terms of public equities versus the growth of the private market.
Well, we expect the private market has grown significantly, and we expect it to continue to. If you go back to 2000, the average company before they went public stayed private for 6 years. Today, it's 14 years. So companies are staying private for twice as long. It's a part of the reason why IPOs are down 85%. And the size of the companies and some of these private companies has grown massively. And tremendous wealth has been created. And we want to provide the opportunity for retail investors, whether investing directly with us or through an RIA, to access some of that wealth creation. It's also terrific for the employees of those companies. If you're at one of these very successful private companies like Stripe or Anthropic or SpaceX, you've seen your paper worth go up tremendously. But that may not help you when you're going out to buy your family a house because you can't liquidate any of your holdings. And I think by bringing the size and scale of Schwab to this marketplace, we're going to create liquidity and demand on both sides of the equation and bring private markets to more and more investors in our country.
I know you've been trying to follow the retail consumer and meet them where they want to go. And Bitcoin has also been of high interest. And I know that we've talked before about how you're launching Bitcoin trading next year. How's that effort going? And what are you seeing so far in the plans?
Well, we're having a lot of success in the crypto space. Our clients are engaged in it today. If you look at the exchange-traded products that are crypto-related, our clients actually own 20% of them. And our clients are coming to our research site 90% more than they were last year. So as a group, our clients are engaged in it, very interested in it. And for most people, they're not actually going onto the blockchain to spend or use Bitcoin or other cryptocurrencies. And so for them, the exchange-traded product is a safe and comfortable way for them to invest. All that said, we will get into spot crypto, and we plan to do that in the first half of next year. And we're thrilled about that because we know we have lots of clients who have the vast majority of their assets at Schwab, but are holding some at digitally native firms and keep asking us to launch this so that they can bring their crypto assets to us. And we're thrilled to be able to do that.